Now let's just look at the uh, key differences. So one is, as I said, like in mutual funds, if you're going to buy, so like it will be allotted in units. So as I said, every mutual fund has NAV, and your overall amount would be divided by NAV, and units should be allotted based on it. So PMS, once you start at 50 lakhs, it's like a direct ownership. So minimum investment, it's actually a mistake. So even you can start with 100 rupee, 500 rupee SIP lump sums. But here in PMS, minimum of 50 lakhs is required. And also the customization. So customization is like in mutual funds, as I was saying, there would be all of the investors in a particular fund will be having the same portfolio. Whereas even let's say if there is a specific multi-cap fund and there are around 1,000 investors in that fund, like people, let's say that fund actually started in 2019 and today it's 2025 and 1,000 people are traveling. The people who have onboarded in 2019 would actually be having a different set of stocks when compared to people who have onboarded in 2023 or 2024. Because even though they're staying invested in the same multi-cap PMS fund, like there would be, in 2019, there would be a different set of stocks which would be cheaper, which would have been trading at a much attractive valuation. Whereas those stocks would have performed well, and they might be in a not at a very attractive valuation, so they can't take exposure to those stocks at that period of time. So like I was saying, this is the main difference between mutual fund and PMS. So there would be a unique and customized portfolio for clients, and also based on their risk appetite. So, like based on the risk score they get while onboarding, like that is the score, and the fund manager and the strategy team will closely look at that number, and they'll set up and manage the portfolio of that of those respective clients. So transparency, like it's actually like each and every day, like you can view your mutual fund holdings. Whereas even in PMS, you can do that. In PMS, you'll get a fully detailed report, at the beginning of the every month for the statement of last month. But also in mutual funds, like both are actually under your PAN. So all will get reflected in your NSTL and CDSL depositories. And if a client also wants to know what is happening on a daily basis, even in a PMS, they can actually go into that NSDL Speedy app and they can view their portfolio there. So both are regulated by SEC. And one more main difference is on the deployment strategy. So let's say like an investor is investing 50 lakhs in a mutual fund. Like, in mutual funds at the end of the closing 3:30, like almost 90% of the 50 lakhs would have been deployed because MF are not supposed to carry more than 10% cash in their portfolio. So since already they have a model portfolio, like the 50 lakhs capital would have been split across, the portfolio, the stock weightage on that particular mutual fund. Whereas let's say a client is investing 50 lakhs in PMS, all that 50 lakhs won't be deployed in one day. Since 50 lakhs is a very big amount, and based on the client's risk score, like they would be deployed actually. And generally, it would take at least 3 to 6 months, and it mainly depends on market conditions. If like there will be days where very steep correction happens. On those days, the deployment pace will actually increase.